What's up, Banter fam? I'm coming at you live on a Sunday to share my favorite strategies to be able to profit in this market using one ecosystem that I think is starting to look pretty undervalued here. So I'll be going through my favorite Avalanche staking strategies and also showing you the reasons why I believe it has massive potential in 2022 and beyond. There are some massive developments happening on chain right now, which I need to make you guys aware of because I think it's going to be a really big narrative this year. And I want you guys to be able to benefit from it. Let's get straight into the show. Wow, over the weekend, we've had some very interesting price action from Bitcoin. We've seen the price of Bitcoin pretty much acting like a stable coin right now. Typically, when we consolidate in a sideways channel like this, we either see an explosive move upwards or downwards. So we are really coiling up for a massive move right now. I hope it's not to the downside, but anything is possible at the moment. Look at this price action from Bitcoin. It's actually pretty crazy. We're basically a stable coin. So it's a very boring market at the moment. So my focus right now is really just focusing on farming and maximizing DeFi yield. Because whilst this Bitcoin price does its thing and hovers around the 39K mark, and obviously we've had a lot of rallies up and then rejections, and then we've had dips, and then they're quickly bought up. It's kind of just not a market that I want to be trading that actively at the moment. So I'm taking a step back and positioning myself for the future and trying to discover the ecosystems that I think can outperform this market, even if Bitcoin dips. So that is really my focus right now, maximizing yield and being able to take advantage of the opportunities in DeFi right now to be able to capitalize on this market whilst we are going sideways. The Bitcoin dominance right now is also going sideways. We did see a massive push up in the Bitcoin dominance, but it was quickly counteracted. So what this tells me is that altcoins are still fairly strong. I feel like I come on the show every day and say this because right now it's true. Altcoins really aren't underperforming. Whenever we get a massive push upwards from Bitcoin, the altcoins are tending to run a little bit harder. So the narrative is still with the alts. I think if we do see a big price rally from Bitcoin, it's clear that the altcoins will outperform, but we do want to see Bitcoin pump first. As we always see it in this market, we always want the Bitcoin price, the Ethereum price, and these major alts to run before the other alts so we can get a bit of liquidity into this market and then we can filter it down into the altcoins. So right now, the Bitcoin dominance is also acting like a stable coin. It's a very weird market at the moment. It makes me feel like something big is coming, either a huge rally to the upside or downside. We always see this with the Bitcoin price. When we coil up into this kind of pattern, we always see a big price movement. So I hope it's not to the downside, but if it is, we are going to be prepared by making sure we are in the right altcoins right now and not in the bad ones. But let's look at how the alts are actually responding right now and how they are responding to this Bitcoin price movement. We've seen altcoins across the board be pretty stable today. However, we've seen some slight drawdowns of 1 to 2% across the alt market. We've seen Luna be one of the strongest performers. This Luna price is very, very strong right now. It's at $90, hitting that all-time high of $100 a couple days ago. It's since pulled back another 10%, but that is a nice bullish retest if we look at the Luna charts. So it's good to see that Luna is still very strong amongst this market right now. And obviously, that is off the back of the UST Stablecoin Adoption, which is really driving this Luna narrative right now. XRP is the other one that has managed to hold up fairly well in this market, only down 0.1% for the day and only down 3.1% for the week. Obviously, the XRP regulatory risk seems to be diminishing when we found out that XRP is doing a little bit better on the legal side of things to do with their SEC case. So that is one to watch as well. I'm not a huge XRP holder, but when I am looking through the altcoins, I do like to identify which alts are showing a little bit of strength right now. But let's have a little bit of a look at DeFi Llama as well, because although we've been in a downtrend, if you pick the right projects, it does soften the blow. So it emphasizes the importance of being in the right altcoins right now to make sure that you are, one, protected against downside risk, and two, when the market does rally, you're in the right projects to be able to take advantage. So the strong narratives will continue to outperform this market. We've seen Luna right now obviously performing really well, and the Luna price has performed strongly despite Bitcoin being in a downtrend. So it does show us that there are still opportunities in the market. You just have to play it right and be in the right projects right now. I will be talking about Avalanche in this video, and that's one of the projects I believe could potentially do a Luna and fight this downwards momentum because it has a very strong narrative behind it. But let's just look at what's happening in DeFi first, because before I can get into my Avalanche thesis and staking strategy, we have to look at what's happening in the DeFi market right now to see how staking is evolving and what is happening over there. So on DeFi Llama, we have seen that the total value locked is actually up 1.5% for the day, which is actually a good sign right now. So even though the Bitcoin price is down 0.4%, we are seeing total value lock continue to increase, and it's been very steady around this $200 billion mark. What this suggests to me is that staking is still a very popular narrative. DeFi is still very popular because people always need to be able to earn yield on their coins. There's no use keeping your coins sitting in a wallet. You may as well stake it to earn some passive income in order to combat the volatile times in this market. So the total value locked I am looking at in accordance to the Bitcoin and altcoin prices to make sure that we are continuing to grow here. Obviously, a major drawdown in the TVL would be a negative sign for this market, but right now we're still holding steady. It's why I'm comfortable where we are sitting right now. As long as this chart looks good, I'm happy to do with DeFi. And obviously on this show, it's all about giving you guys the best DeFi alpha to maximize your yield. Let's look at what is happening across the chains right now, though, because we want to get a picture of which altcoins are outperforming this market right now. Obviously, Luna up 10%. For the week, 79% from the month. It has been the strongest performer across DeFi. But there are some other narratives starting to take place here. We are seeing Avalanche ticking over into a little bit of green at the moment. And if we look at the AVAX TVL, it's starting to creep into that top 3 bracket. So Avalanche for a while sat around 5th or 6th. It's now looking like it could flip BNB for the 3rd spot in TVL. And in today's video, I'll be showing you why that is occurring, why the Avalanche TVL is so positive over this last month. If we look at Phantom down 24%, Solana down 18%. The Avalanche TVL is actually holding fairly steady, only down 0.4%. So there are reasons why liquidity is staying in the Avalanche ecosystem, and I'll break that down for you guys right now. But this is a very positive sign that Avalanche has been able to maintain a relative TVL compared to the rest of the market during this price volatility. But we have to ignore the price action because there is massive developments happening on the AVAX chain right now. As we can see, the price is still down 52.2% from highs. So we are still at a significant drawdown from the highs that Avalanche hit, but we've been consolidating in this wedge here. So in my opinion, Avalanche can be one of the strongest performers in this market if we do get a push to the upside. If we get a push to the downside, I'm hoping that it can shrug off market volatility because it has the strong narrative. But obviously, if we do drop, we can still come down to this $50 level that we wicked down to when the Bitcoin price had that massive wick down on Invasion Day. So if we have another negative price movement from Bitcoin, the Avalanche price is obviously susceptible to coming down a little bit further. But obviously, I always preach accumulation, and accumulating these projects in these lower zones is what I aim to do through both DCAing and farming. But the price action is something we should be ignoring right now. And I know that sounds counterintuitive, but right now my focus is looking at what is happening on chain. What are the developments that are happening on the Avalanche ecosystem with their incentives, with new developers, with new games? Because that is the only way we can truly evaluate a project in this market. The price action across the entire crypto market right now stinks. There are many projects that are performing quite badly in terms of price. So let's just take a step back from price. Let's remove ourselves from the dollar value of these tokens and look at what is happening on chain, because that will set us up for much more success in the long term as the prices start to recover. You guys know I'm obviously bullish on the crypto space over the next few years. So eventually they will recover, and the strongest coins will be the ones that can outperform the market if that happens. So let's break down, one, what is happening on the Avalanche chain with these new developments. There is honestly some massive news I'm going to reveal to you guys today to do with Avalanche. And two, now that we have that information, how do we stake to take advantage? Because obviously, staking to earn passive income is one way we can play this market right now while the Bitcoin price figures itself out. So let's look at what is happening on Avalanche and what is really going to set Avalanche up for success in the near future. And I'm a big believer in Avalanche and its technology. And honestly, my belief over the past month has become even stronger towards Avalanche. I was a little skeptical a couple months ago to do with the valuation, and I arguably still am because it does have quite a high, fully diluted valuation. But I've actually been researching what is happening on chain, and I'm pretty blown away. So I'm going to reveal some of this stuff that is occurring right now. The first piece of news is the Avalanche Foundation launching its Multiverse, up to $290 million incentive program to accelerate the growth of the new Internet of Subnets. This is massive news, guys, because the Avalanche Foundation is launching a $290 million incentive program, which will enable subnet functionality, enabling a rich ecosystem of scalable app-specific blockchains. This means that subnets or blockchains can be launched alongside the Avalanche mainnet, which will enable the network to become a lot more scalable. Avalanche has a very unique system when it comes to subnets that I'll break down for you in a second, which is basically facilitating this massive developer grant of $290 million. So these massive incentives, what they are doing is they're bringing new developers into the ecosystem to build out the chain. Avalanche has subnet capability, but it also needs the developers to come on and build on these subnets, build new blockchains, and flesh out the Avalanche ecosystem. With this new incentive program, that is a great indicator to me that this is starting to happen. This accelerated adoption is going to start occurring, as we saw with the massive development grant on Avalanche last time. I think it was $1 billion. We saw a massive growth in the ecosystem. And we also saw that the same thing happened for Phantom. Multi-$100 million incentive program worked really well. So Avalanche is backing this up with another grant right now to build out its subnets, which is very bullish for the ecosystem as a whole. But in order for you guys to understand why this is so important, I have to break down what the subnets are and how the Avalanche technology works, because there's no use on being bullish on the multiverse if you don't understand how the subnets work. Obviously, we have to understand the tech here, because the tech is what is going to be driving this next push up from AVAX. So what are subnets? Subnets are essentially Avalanche's scaling solution. So they offer an out-of-the-box solution for companies, DAOs, and individuals to create a unique blockchain with completely custom parameters. So these are unique blockchains built on top of Avalanche that operate independently of each other, which is massive, massive news. So subnets can be permissionless or permissioned or permissionless, and most importantly, they are interoperable with other subnets. So they don't work in isolation of each other. They are actually interoperable with each other. So kind of like we've seen with Atom and Polkadot building these layer 0 solutions with multiple networks on top of them, Avalanche is building the same thing right now with its P chain. So we see the main network of Avalanche, you can build multiple subnets on top of it. So it's a scaling solution, because what these multiple subnets are doing is it's taking pressure off the contract chain and the main chain, because it's obviously there's a lot of network congestion when we see a chain operating in isolation. But when we can get the subnets involved, it takes pressure off the network. So subnets are essentially the way that Avalanche scales, and it's a very bullish thing that we're seeing with this developer grant, because now there's going to be multiple blockchains building on top of Avalanche in this ecosystem, which is going to build out the ecosystem right now. So it has a very smart design, because the subnets are not dependent on the mainnet. So this means less network congestion, and that will obviously enable Avalanche to become one of the most scalable and fast blockchains in crypto. So it's a very smart design. We are seeing this happen with the very first subnet launching, and this is the Crabada subnet on the Avalanche network. So we all know Crabada is a very nice play to earn game on Avalanche. They are actually launching their subnet on the network. So we're seeing this grant happening in real time with real games that are launching. And this is a dedicated blockchain for gaming. So they're going to be launching this blockchain using an Avalanche subnet. So we're probably going to see this theme reoccur across Avalanche, where we get multiple gaming projects. I think DeFi Kingdoms here is involved with their own subnet. We're seeing multiple other gaming projects come onto the network and building their subnets. So Avalanche is kind of firming itself to be the gaming chain right now. Obviously, they have amazing DeFi with top 3 TVL in all of crypto, but AVAX gaming is really the other thing that is driving this narrative strong. When we look at other chains, when I look at Phantom, I see an amazing DeFi ecosystem, but it is lacking in gaming. When I look at other networks, I see like something like a Matic struggling with being able to handle the workload of all these gaming protocols launching on the network. So Avalanche, with its subnet design, with its custom gaming blockchains, can be one of the big winners in gaming here. And I think the gaming narrative is something that's really going to drive Avalanche in the future and set it apart. The other key factor to these subnets is that they are very fast to deploy. The leader of Avalanche actually deployed a subnet in less than 10 minutes. So they're very easy to create and very easy to deploy, which is obviously an additional incentive for developers to come on and flesh out the network. So subnets are absolutely massive, and it's not a piece of technology to sleep on it. It's one of the reasons why I'm very bullish on Avalanche. You guys have to check out this article. It's quite extensive, but there is many quotes from people across the industry weighing in on why they think the subnets are an ideal mechanism and why it can be so bullish for the ecosystem. So check that out. The Medium article is by Avalanche, and it's about the incentive program. And obviously I talked about Crabada as well. But gaming isn't the only thing that's spurring Avalanche on at the moment. It's also NFTs. So for a while we saw the Avalanche NFT ecosystem was not very impressive. It was kind of lagging behind Ethereum, lagging behind Solana, but now we're seeing daily sales on the network almost catch up to Solana. So the daily sales in terms of NFTs on AVAX is now $1.6 million. Solana is $2 million. So we are seeing AVAX starting to catch up to Solana in terms of NFTs, which is very bullish as well, because obviously the NFTs are working in tandem with the massive rise of gaming on Avalanche to flesh out the ecosystem. So when I look at L1s, we really want multiple use cases here, guys. We do want DeFi, but we also want gaming, NFTs. We want multiple scaling solutions to be built on top of these protocols to help assist with this. So it's very bullish that we are seeing the NFT ecosystem on AVAX also really increase, and that is a bullish sign. But how can we get involved and profit using DeFi to profit off this narrative? The obvious answer would be to own the Avalanche token, because the Avalanche token is obviously the token powering the network. The more the network's used, the more of the AVAX token is burnt over time, and the more that gaming is fleshed out on AVAX, the more AVAX tokens will be needed to facilitate transactions on the network. But when we consider transacting on the network, there is really only one place where you can do that right now, and that is TraderJoe. TraderJoe is the best DEX in the Avalanche ecosystem. And when I think of all these games starting to launch on AVAX, we're going to need a lot of DEX power to be able to power these transactions. And the more transactions that are happening on the TraderJoe DEX, the more revenue that protocol makes. So the obvious play here, in my opinion, is actually staking your Joe, because by staking your Joe, you'll be getting a share of protocol revenue. So as I said, as the Avalanche network transactions increase, then obviously TraderJoe makes more revenue, which is then distributed to holders. So holding the AVAX token is great. And after this first strategy, I'll show you how to profit off that. But the first thing that I want to touch on is the TraderJoe staking. It's one of the plays that I have the most conviction in the Avalanche ecosystem, because I always believe it's important. When you own an L1, you always want to be able to hold the ecosystem tokens as well, because those tokens are what is going to give you more exposure to the ecosystem. Obviously, ecosystem projects are more risky than their layer 1 counterparts. So the TraderJoe token is more volatile in terms of price than the AVAX token, but there is significantly more upside here. And we did see the TraderJoe token hit an all-time high of $5. It's now sitting at around $1. So to get back to all-time highs, it's a 5x. Obviously, we are still reliant on the Bitcoin price right now, but if you're bullish on AVAX, Joe is one that I would be accumulating here. So we had xJoe, and what xJoe was you could stake your Joe and earn yield, and that was the sharing of the protocol revenue that I was just talking about. But they actually changed their mechanism. They saw the success of Curve and Liquid Driver and these other protocols implementing the VE mechanism, so they've changed the staking mechanism on Joe to benefit from the new incentives. So basically, the way you stake Joe now is via Stake Joe. So if you have Joe in your wallet, and you can do this by trading on the TraderJoe platform, you can stake this Joe for xJoe. So by staking Joe on this page here, you'll be earning 27.9% APR, and this will be distributed once per day. The really cool thing about this is that you're actually earning USDC. You're earning stable coins to stake Joe, which is pretty awesome, because if you want to build up your stable position, this is one way that you can do so indirectly. And it's also good because the price volatility of a stable coin and the price impact when swapping it back into Joe would be less than another token. So if you're earning a random token, it's not quite as good as earning something like USDC. So it's quite nice that we are earning USDC here, and you're also making 28%. Now, 28% for a governance token doesn't sound great, and I respect that. But I'm personally using this strategy because I think 28% on the top DEX on AVAX, which has significant upside potential with the growth of the network, is a pretty good play. But as I was saying, they are switching to the VE model. And here's a little bit of alpha for you guys that are watching the video right now. veJoe is coming soon. So what veJoe will enable you to do is stake your Joe, and you can boost your rewards from your pools by locking veJoe. And what this will do is it will incentivize people to start locking their Joe. So the more people that lock up their Joe for veJoe means that the circulating supply of the token will decrease. Just like we saw in platforms like Liquid Driver, it significantly benefits holders to lock up their Joe as veJoe to be able to boost their pools. Now this is coming soon. I believe it's coming within the next couple of months. So right now my play is to stake Joe in the stake Joe farm for 28%. And then obviously when veJoe comes out, I will be locking it up to boost my xJoe rewards. So this is going to be all fleshed out. This is a very new mechanism. They've just introduced it. So they rolled out xJoe first, but the veJoe mechanism is going to be really awesome for you guys. So that is some great alpha. I think it's really going to take this platform to the next level. We saw it succeed with Curve and Convex, and we're seeing it succeed across multiple protocols right now. So that is my first play, and it's my biggest conviction play in the AVAX ecosystem right now. I wouldn't be aping in. As I always say, dollar cost averaging is always the way, guys. I just showed you before that the Bitcoin price is looking shaky. So I don't recommend aping into Joe now, but maybe getting a little bit of exposure, learning how to farm on it, and then slowly dollar cost averaging over the next 6 months would be the best way to approach this. So I didn't buy my full Joe position now. I bought a little bit a few months ago. I bought some last week, and then I'll be continuing to buy over the coming weeks and accumulating a nice position slowly and steadily, and I'll be farming it at the same time. Slow and steady wins the race in crypto, guys. But I've got one more strategy to show you, and that is AVAX single staking. As I showed you before, owning the AVAX token will be one of the best ways to get exposure to the network and be able to benefit from the increasing amount of transactions on the network. I showed you Joe as one way to do that, but obviously we need to have a lower risk play because I never recommend holding more ecosystem tokens than the original layer 1 token itself. The AVAX token itself is probably the better risk reward play overall. So I'll show you my favorite strategy for single staking AVAX right now with no impermanent loss. So when I look at single staking strategies, I like to go for things that have liquid staking elements, which means there's no impermanent loss and you're essentially single-sided staking your AVAX to earn yield. So I'll show you the AVAX staking strategy right now to be able to take advantage of that. And it's all unlocked by this app called BENQI, which pretty much allows you to stake your Avalanche and you get AVAX in return. I talk about liquid staking quite a lot on the channel, and that is because I believe it's one of the best ways to be able to, 1, earn yield, but 2, minimize downside risk. Because obviously impermanent loss, if you're staking AVAX with a stablecoin, could mean you lose out a little bit of gains if the price pumps. But the benefit to doing this is that you can maintain exposure to AVAX. So it's very simple. You obviously need a MetaMask wallet, and you can come into BENQI and stake your AVAX for AVAX. This will give you an AVAX token, which is pegged to the price of AVAX. So every time you stake your AVAX, what BENQI is doing is it's taking AVAX and it is staking it using validators, and you are getting the percentage APR that you would be for staking it, but you don't need to lock up. So you still have the liquid token, which you can use to earn further yield. Right now, the yield on AVAX is 7.2%. So as soon as you stake your AVAX for AVAX, you'll start earning 7.2%. Doesn't sound too impressive, but we can now stack this on Pangolin to earn even more yield. So what you want to do is swap 50% of your Avalanche tokens for AVAX. You're going to need your other 50% of tokens still in Avalanche, so you can pair them together to earn yield. So only swap 50% of your AVAX for AVAX here, and then once you do that, you can earn 7.2% on half your AVAX. But it doesn't stop there, because if you come into Pangolin, which is another great protocol on AVAX, you can pool your assets together to create a liquidity pair. So what you do here is you click on the pool function of the Pangolin exchange. Once you have AVAX, you click add liquidity. You want to select your AVAX, and then you also want to select AVAX as well. And then you create a 50-50 LP here. So obviously you want to put in all the AVAX that you just staked, and then you want to pair it with your existing AVAX to create a liquidity pair, approve the transaction, and do it over here. So just to summarize, you swap half your AVAX for AVAX, then you take that AVAX and you come in and you pair it with AVAX under the pool function here. Then you take these LP tokens, so now you have 2 tokens together. Once again, no impermanent loss because SAVAX and AVAX are obviously going to be the same price. You come over to farm and you click on version 2, and this will open up one of the greatest farms on this protocol, in my opinion. It is a low APR, it's only 12% right now, but the benefit to this is that it's stacking on top of the 7% that you initially got on half of your tokens. So it balances out at around 14% APR, but that is very, very good because it's liquid staking, and 14% on Avalanche is not something to snuff at. It's definitely a decent yield in the ecosystem, and it's currently the best liquid staking yield on AVAX right now. So you go to this AVAX pool once you have your LP tokens, and then you can deposit them here to earn PNG and QI. Obviously, 14% isn't exactly accurate because you can take these rewards here that you receive, so the Pangolin, the QI, and then you can swap them back for AVAX and repeat the strategy every time you get rewards. So just to recap, just to make sure you guys are clear on this, you take your half of your AVAX, swap it for SAVAX, come into Pangolin, click on pool and create LP tokens so SAVAX, then come into the farm function here under version 2, and you can select SAVAX and deposit your tokens here for a 14% total APR, which you can then compound back into Avalanche by retracing these steps for roughly a 17% APR compounding daily. So it's a pretty good strategy there to earn 17% on your Avalanche. It's a decent strategy because there is no impermanent loss. I see a question here, can SAVAX lose the peg? The answer is no, that's not really how liquid staking works. It's not directly pegged to Avalanche. What they're doing is they're taking your AVAX and then they are staking it for you. So instead of you having to take your Avalanche and stake it in a validator node to earn yield, they are taking your AVAX and staking it, and they are giving you an SAVAX token, which is essentially a receipt of your original token that you can then use to earn yield on. So there are certain risks with SAVAX. Obviously, if there was like a bank run and there was heaps of sell pressure, the price could potentially lose peg, so to speak, but it isn't directly pegged. It is a little bit safer than a traditional peg. But obviously there are smart contract risks whenever you're executing DeFi strategies. So always watch out for that and diversify accordingly. Never put all your eggs in one basket. I hope you guys learned something in today's video. It was a pretty jam-packed video, and I revealed some pretty big pieces of news that we're getting in the AVAX ecosystem regarding the new incentive grant and regarding some of the insane volume we're seeing on the network right now, including a Trader Joe strategy and a strategy for you guys to be able to earn single-sided staking yield on your AVAX. If you enjoyed the video, make sure you smash the like button. I will see you next week on Tuesday, where I'll be streaming at 3 a.m. EST or 10 a.m. Cape Town time, which is UTC +2 every day to bring you guys the best DeFi strategies in crypto with the top alpha. I will see you in the next video. Peace out.